Hi everyone, my name is Carlos Ramirez and I will be introducing our app, and my group members and I will give you insights into our app and demonstrate how someone or a company could utilize our app. Our app that was designed is called Net Worth Calculator Pro. Before my team members show you how the app works and go more into depth of what the app can do, I want to explain what our app is meant to do and why we built it. Our app is called Net Worth Calculator Pro, and the purpose of this tool is to help business owners better understand the financial health of their company. We designed it as an easy to use financial dashboard where users can enter information about what their business owns and what it owes. Once they input their assets and liabilities, the app automatically calculates the business's net worth and provides financial insights. Let me explain that a little bit more. In the business world, owners often struggle to keep track of their finances in a simple way and a visual way. Many business owners have access to financial information, but that doesn't always mean they understand what those numbers are telling them. They might have spreadsheets, bank statements, or reports from accounting softwares, but without the right tools, it can be difficult to interpret that data in a meaningful way. Because of that, financial decision making can also become overwhelming. A business owner might know how much money they have in the bank, but not know how it compares to what they owe. They might know they have assets like equipment or inventory, but not how all those pieces add up to reflect the true value of their business. And when liabilities come into the picture, such as loans, credit card balances, or overdue bills, understanding overall financial health becomes even more challenging. So our app was built to make the entire process clear and straightforward instead of forcing users to dig through complicated spreadsheets or do math on their own. The app organizes everything in one place and calculates the results instantly. It turns raw financial information into something visual and easy to comprehend. By simplifying these concepts, we help users not only see their numbers but understand them, which is the first step toward making stronger financial decisions. The first major part of the app focuses on assets. Assets are anything a business owns that has value, like cash, equipment, inventory, or accounts in the bank. Users can add as many assets as they need, and app totals them automatically. The second major part focuses on liabilities, which are the financial obligations or debts a business owes. That can include loans, credit card balances, unpaid invoices, or taxes. Just like with assets, users can add multiple liabilities and the app will calculate the totals. Once the app adds up both sides, which are assets and liabilities, it then performs the most important calculation. Net worth equals total assets minus your total liabilities. What makes our app stand out is that it doesn't just give a number, it gives us strategic financial insights based on users' inputs. For example, the app can highlight strengths like liquidity, areas for improvement such as debt management, and suggestions for optimizing assets. These insights are written in a way that users can understand, even if they don't have a financial background. So in summary, our app calculates total business assets, total business liabilities, business net worth, and personalized financial insights based on users' financial profiles. The goal of Net Worth Calculator Pro is not only to give user members, but to give them clarity, understanding, and guidance. Whether someone is starting a small business or managing an established company, this tool helps them see how financially healthy their business is and what steps they can take to improve it. In the next section of our presentation, you'll hear from the rest of my group members as they explain their contributions to the design, development, and functionality of the app. Before we get to that, I want you to keep in mind that this project was more than building a tool. For us, it was about learning how to design a product from scratch, collaborate as a team, and create something that solves a real-world problem. With that, I'll now pass it on to my group members to go into more detail about how each part of the app functions and how we built it. Thank you.
Hello, my name is Samantha Lugo, and today I'll be talking about the technical part of our app. Hello. In this app, I'm gonna walk you through the full technical build out of our net worth calculator for business owners, of course. My goal when I was creating this app was just to see how users can enter information and how they're able to interact with this app while with so we are able to see what they are, how they can track all their information. So, first, our business assets, which is right here. That's one of our first, one of our user inputs that I inputted when I was typing up the actual app. So I asked the edit part right here, what create an app for a network calculator for business owners, and it generated this. So yeah, first we have our business assets, which that's where we're gonna start with, and this basically collects everything that a business owns that has value. So like let's say some examples, cash on hand, money in the business account, bank's accounts, equipment, missionary tools, vehicles, inventory, furniture, real estate. And yeah, so if you input on the actual on this part, you usually would end up with this. This is how we are able to generate everything. So we have our tangible assets, intangible assets. That's how we were able to generate it. But yeah. That's for, and then it basically lets the user enter their assets in whatever order they want, and it handles both small and large lists. And it's central because this is actually very important that none of their numbers are inaccurate when adding it up all together. And yes, so our business liabilities. Business liabilities, the liabilities represents anything the business owns, owes to someone else. So like, let's say, for example, the business loans, credit card balances, uh, payments due to suppliers, outstanding taxes, lease, rent, short-term and long-term debt. And well, like the user is able to enter all of their liabilities on what they owe, what debt they owe, how much they owe, when it needs to be paid, and the interest rate, which is very important. This gives us a details of a list of details, understanding the financial obligations that they need to control. So together with assets and liabilities, it determines the financial pressure on the actual business since yes, they have all these assets and everything, but they still have the liabilities, meaning they owe stuff. They need to finish owing everything. So yeah. Um, let's see. And then we have our business industry. You are able to input your industry. So you can say hospitality, like investing, counting, anything like that, and it will generate an app according to the industry that you're in. So for me, I ended up putting investing just to see. And so if we check the preview, this is how it generated for an investor. So this is how it came out. And to let's say to the extract financial data. Um, This is a very important part of the workflow. This block basically cleans up all the stages of the system because it validates the data. Like, for example, are the numbers valid? Are the dates entered in the right format? Oh, sorry about that. Are they missing any fields? We also have to clean the data, fixing formatting issues, convert their we have to see all the categories that it has. So like we see all the little steps that it generated for me, like all the little bits. And yeah, and it also organizes the data as well. So like group assets, the group by category and date, and it prepares the data in a uniform structure. And it builds a clean financial snapshot. So at the end of this app, we see a full list of assets and how it's like properly structured. And we also see a full list of liabilities. And yeah, so that is our extract financial data section. And now we have our generated NAICS code. which is very important in some sense. This is basically what structurizes like everything, so everything works perfectly. And yeah, so to calculate net worth, now we reach the core system of the net worth calculation. Basically, this uses the clean data, and we are able to run three very important calculations, which is the total assets, for example, equipment, cash, inventory, and let's say one of them is 10,000, one of them is 3,000, and then another is 2,000. You add all that up, that's 15,000. And that's our total assets, our total liabilities we owe, meaning we have 6,000, say 1,800, whatever. Um, that's still like 7,800 if I'm doing my math correctly. And obviously, with our total assets and our total liabilities, we have to subtract them since our liabilities is what we owe. So we grab those two, and for example, we get 6,800 if you subtract the two. And it has automatic recalculations, so you can edit it. Yes. Generated business advice. Once the system knows the business net worth, it moves into a business advice. So, this is where the numbers turn into a practical insight. So, the ratio of debts to assets, whether cash reserves are healthy, how much equipment and versus cash the business has. Yeah, these are all these patterns. It's kind of what produce simple and helpful advice. Like, let's say an example, your debt is high compared to assets. Consider reducing short-term liabilities, or you have to increase your cash buffer for emergencies. This advice helps business owners understand their financial strengths and their weaknesses. So now we have our generated interactive dashboard. All the previous steps come together in the final stage, and this basically, here we can actually see it here. Generated interactive dashboards, it's the final step. The dashboard displays the entire financial picture clearly and visibly. So it includes a net worth summary, like total assets, total liabilities, and calculated net worth. We have our visual chart, which is our pie chart of assets categories, bar charts comparing assets and versus liabilities, debt to asset ratios, detailed breakdowns, and individual assets, individual liabilities, and category totals. We have our business advice section. It basically personalizes recommendations, and it's basically very easy to read. Add slash edit controls. Users can add new assets, add new liabilities, update values, remove outdated items. Yeah. Dynamic updates. We will have different updates depending on when a user changes their sections, I guess, their app. And we also can apply this based on a theme. So let's say, for example, um, they want to see a bakery. The bakery wants to see warm colors, or a transportation company might want to see bold metallic tones. It's like the little things like that. So yes, that is my presentation for the technical build out of our presentation. Thank you.
Calculating a business net worth is crucial because it provides a clear quantitative snapshot of the company's overall financial health and stability in a specific time period. This figure is used by the owner to strategic planning, investor to assess value, and the lender to determine credit worthiness. We have a scenario here that ABC Furniture Company, it's a retail furniture company in Miami-Dade County, and they want to know if their financial ability allow them to open a new store in Tampa in 2026 or not. So they provide financial data, including assets and liabilities as of November 31st, 2025, and they want to use our app to run the report. Okay, so we'll go to the app, and then it's on the app screen. So our app is Net Worth Calculator Pro. Let's click Start. So first of all, we have to list all businesses, assets, and values. I'm going to minimize this so that I can input the information here. So we have to put the cash first, assets, put cash, and it's this amount. And then account receivable. And inventory. Vehicle. Equipment. Furniture. This furniture is not the furniture that they are selling. It's the furniture that for example, the office chair, office desk, etc. Okay, so now I finished entering the assets part. So I submit. The next step we need to do is to enter all business liabilities and values. So they have accounts payable, sales tax payable, income tax payable, unearned revenue, credit cards, and store credit and loans payable. And also wages payable. Okay, so I submit. And now we have to enter the business industrial. So they have furniture retail. I put furniture store. Hit submit. So in here is telling us the report are generating, and we can see the steps. Okay, so to save time, I have run this report. Okay, so as you can see here, this is a net worth calculator. It's for our furniture store, ABC Furniture Inc. And on the left-hand side, it has all the assets that I inputted previously as cash, account receivable, inventory, vehicle, equipment, furnitures, and these are the amount. And also has the liabilities. You have accounts payable, sales tax payable, income tax payable, unearned revenue, credit cards, store credits, wages payable, and loans payable. And these are the amount. Okay. And then the report was run and it generated all this result. So first of all, it generated the total net worth. It computed to $166,270.99, which is this the formula, assets minus liability. So basically, this is the owner's equity. Okay. And it also provide the debt to equity ratio, current ratio, and the working capitals. And it also provided the financial guidance reports, ratio analysis report, industrial insights report. So all these numbers and reports helps ABC Furniture Inc. to be better understand their financial health position and to make a better business decisions. So let's take a look at here. For the financial guidance, provided ABC Furniture Inc. Suggestions on how to manage each account. Okay, so for example, on the account receivables, our app suggests that they implement collection procedures to ensure timely payment and monitor aging accounts. And for the inventories, you suggest them that optimize levels to avoid overstocking and understocking. And also accounts payable suggest that manage payment terms effectively with suppliers to optimize cash flow without damaging relationships. Okay. And then also for the credit cards, it suggests that prioritize paying down high interest credit card debt to free up cash flow. And then for unearned revenue and store credit, suggest that fulfill these customer obligations efficiently in order to maintain trust and satisfactory. So all these suggestions will help ABC Furniture Inc. To make improvement and maximize the profit for the business. Okay. And let's see the ratio analysis. So this ratio analysis is basically provide analysis for this data that was run. Okay. So let's take a look at the total net worth for ABC Furniture Inc. So the net worth is $166,270.99. So this is a positive net worth. Indicating that ABC Furniture Inc. has a very good financial health. And it shows that they can continue to build on this equity throughout profitable operations and strategic reinvestment. So this means that ABC companies plan that opening another store in Tampa is reasonable because of their net worth. Okay. So the next thing is the debt to equity ratio. The debt to equity ratio is 1.22 for ABC Furniture Inc. The benchmark for debt to equity ratio for retail, it's 1 to 2, which means between 1 to 2 indicating is healthy. The financial is very healthy. And ABC Furniture Inc. ratio is 1.22, which is in between this benchmark. So that means they're indicating that moderate reliance on debt, while not excessively high, is considered strategic and greatly reduce debt or increase equity to improve financial leverage. Okay. So the next one will be the current ratio. The current ratio is 2.35. 1.2 to 2.5 is healthy for retail. So ABC Furniture Inc. right now is 2.35, which is in between 1.5 to 2.5 in almost reach, is closer to 2.5. That means that their ratio is very strong, indicating that they have an excellent short-term liquidated and a solid buffer for operational needs. So this is need to ensure current assets are being utilized productively. Okay, and here it runs the working capital is 198,525.21. So this substantially positive working capital reinforces the strong current ratios, providing significant operational flexibility to pursue growth and withstand short-term financial pressures. So all these racial analysis indicating that ABC Furniture Inc. The plan to open another store in Tampa, it's reasonable, and it can be taking further consideration, making further plan for next year. Okay, so on here, industrial insights. So industrial insight is for the NACE's code is 44210 for furniture stores. Here it's the analysis for the furniture industry. So the analysis indicating ABC Furniture Inc. business operates in a competitive retail environment influenced by customer strengths, economic conditions, and logistical challenges. And this will be so for inventory optimization, efficient stock turnover is paramount. So they need to focus on demand forecasting and strategies to liquidate slow-moving inventory to free up capitals. And customer experience and merchandising differentiate through a superior in-store experience, personalized services, and inspiring showroom displays. And omnichannel strategy integrate online sales with their physical store. This is a very good idea. So maybe because right now a lot of people is shopping online. ABC Furniture Inc. They only have one physical location in Miami County, and they haven't implementing online store yet. So maybe they should think about instead of open a new physical location in Tampa, maybe they should think about the integrate online sales. For example, hiring a IT company or website designer company to help them to design a website and to start online sales instead of opening another location in Tampa. And also here's the supplier relationships. It's built a strong relationship with manufacturers and distributors to optimize the supply chain and minimize the freight cost. The reason why I said it here is because as we can see that on the liability side, accounts payable, ABC company have $95,000. So if they can maintain a supply relationship well, maybe they can get more credit limit from the supplier, and they can use their available money to invest online shopping website. Okay. So, and the last is financing options. So offering consumer financial can significantly boost sales by making higher ticket items more accessible to customers. So our app this is the result for ABC Furniture Inc. As you can see here, our app is very clear and it's user friendly, and it shows the information that is input and also the outcome, and also providing financial guidance, racial analysis, industrial insight.
Hello everyone, my name is Nadia Ortega, and today I will be demonstrating my scenario for our group project with our app, the Net Worth Calculator Pro. For my case, since I am in the beauty industry, I will be showing how a beauty salon or a salon suite owner can use our app to understand their financial health, track assets, liabilities, and make better future business decisions based on real numbers. This scenario reflects a typical beauty industry owner, someone who may not have accounting background but needs a simple tool to quickly understand if their business is financially stable or at risk or maybe even ready to grow. So our app, the first thing you're going to use is from start, and then I'm going to start listing out all of our assets. For example, lash beds for $2,000. Then we have facial machines for $3,500. Then I'm going to have hairstyling stations for $4,000. And I'm going to have products to sell for $1,800. And lastly, cash in bank for $7,200. Tools for $1,500. Then I'm going to add our liabilities. For liabilities, we have equipment loans for $6,000. Then I have credit cards for $2,200. Then we have supplies that we owe for $800. Then we have the rent of the salon suite for $1,000. And lastly, what industry? We're in the beauty salon industry. Then the app starts doing all of the thinking, and it leads us to the final results that show our net worth calculator, and it shows our net worth being $10,000. This figure is calculated by subtracting our total liabilities, $10,000, from the total assets of $20,000. And a few key points that the app emphasizes is the positive net worth, which means the business owns more than it owes. This is a healthy sign and shows that the salon has a stable foundation. It also provides a financial buffer for unexpected issues such as slow season and all that. First, I want to show you guys what it shows us here in the asset and liability management. The app then breaks down the different groups of assets and liabilities and gives personalized recommendation. Let's walk through a little part here. First up is cash in bank. The results show that the salon has a strong cash reserve. The app explains that the high liquidity is extremely beneficial for service-based business like salons because it allows the owner to cover slow weeks, buy supplies quickly, and take advantage of deals. Also, having a healthy cash flow is one of the biggest indicators that a beauty business can operate sustainably. Then we have the retail products. For retail products, they are listed as assets. The app mentions that retail provides an additional revenue stream, helps increase profit management, and helps build brand loyalty. The recommendation is to use inventory management so that the salon doesn't overstock or run out of bestsellers. This is a real-world problem for beauty professionals, and the app highlights it clearly. Then we have fixed assets or equipment. These items are like the lash beds, the facial machines, and stuff like that. The app explains that these are the operational backbone of the salon. It recommends a maintenance schedule, proper cleaning, and tracking the lifespan of equipment. This helps preserve the value and avoid costly breakdowns. Then we have equipment loan. The business has an equipment loan. The app recommends to make sure that the revenue from the service side, like facials, lashes, and hair services, comfortably cover the loan payment. It also suggests that monitoring interest rates can to see if the refinancing would save money in the long run. Then we have credit card debt. With this, the app strongly recommends prioritizing credit card repayments because it usually carries the highest interest. Paying it down first reduces interest costs, improves cash flow, and strengthens the financial stability. This is a critical tip for beauty owners who often use credit cards to buy supplies. Then lastly, we have operational payables. These include things like the rent, the back bar beauty supply balances, the monthly subscription fees, or booking software charges. The app highlights the importance of staying on top of these because it directly affects the vendor relationships and month-to-month cash stability. Then here we have the industry-specific advice. For industry-specific advice, it is the most powerful feature of our app because it gives the industry specifics based on the specific industry. What this means is that since the user selected beauty salon or personal services, the app actually provides specific tailored financial strategies. And how does this help? First, with client experience. The app recommends to stay heavy on the customer service, the client relations, the loyalty programs, and the beauty businesses thrive on repeat clients. So building a strong relationship is financially beneficial. Then we have service diversification. The app encourages staying updated with beauty trends. For example, adding brow services like maybe lamination, offering hair Botox treatments, incorporating new facials or peels, or adding waxing or body sculpting services. New services can always increase revenue and attract new clients. Then the app advises about the digital presence. The app advises online booking, professional, maybe having a professional website, social media, and high quality content. A strong digital presence increases visibility and helps salon stay competitive. And lastly, retail optimization. The app recommends the staff education on product upselling. Retail is one of the easiest ways for a salon to boost profit, increase average ticket size, and enhance the client experience. With a net worth of $10,000, assets of $20,000, and total liabilities of $10,000, the salon can make several confident decisions based on the app's insight. The business is financially healthy, debt is manageable, but credit card balance should be reduced first. The salon has enough cash flow to operate smoothly. The owner can consider adding one new service or upgrading a piece of equipment without taking any heavy risk. And it may be a good time to launch a client loyalty program or start boosting retail sales. By giving a clear explanation and industry-tailored advice, the app helps the owner understand exactly what to do next. In summary, the Net Worth Calculator Pro takes raw financial data from a beauty business and turns it into a simple, actionable guide. It breaks down assets, liabilities, net worth, and provides industry-specific insights that empower a beauty salon owner like myself to make smarter decisions. Thank you for watching my beauty industry scenario demonstration.
Hi, my name is Maria, and just like Wenjie and Nadia, I'll be going through different scenario where a business owner can use the Net Worth Calculator Pro app to evaluate the financial health of their business using their assets and liabilities as inputs. This app is not necessarily made only for CFO or controller. It can be used throughout the organization by different departments, and the purpose of the app is for the user to gain knowledge about their financials, to make better decisions, not only for the health of the department, but also the company overall. So the user will go in the app, they click start, and they will start putting in the assets, the type of assets, and the value for the asset. I just prefer to upload a balance sheet, a CSV file of a balance sheet. Most businesses, unless this is a mom and pop shop, they have a financial software where they can just import, or should I say export, the balance sheet for the business. So I'm gonna upload, and then I'm gonna upload it again because it's asking for the liabilities, but everything is together in one file. And for this business industry, I'm gonna say that I'm an agricultural chemicals retail. So for this scenario, this is a agricultural business selling chemicals and fertilizers to growers and farms throughout Florida. So agricultural chemicals, And this is in the retail. Retail. Okay, so let's say that I'm in the logistics department of this company and I want to increase inventory by the end of the year in preparation for next year's growing season. One of the ways the company can do this is taking advantage of what they call the early order program. This is a program offered by manufacturers to distributors or dealers where they can purchase large quantities of merchandise. They will receive it by the mid-November, December, and they would have to, the invoices become due between February and March. So they have 60, 90-day terms to pay this invoices, and the benefit of it, one, you get a longer terms, but also you get a discount, usually 3%, 7%, depending on the manufacturer. So this company wants to take advantage of that offer. Can they do it? That's the question the logistics department is asking themselves. Can we increase inventory by 150,000 in preparation for next year's growing season? The app is telling me that the total net worth is 545,000, which is really good. The current ratio is 2.70, debt to equity ratio is 1.12, working capital is 190,000. The part that I'm mostly interested in is the ratio comparison. Industry advice, ratio benchmarks. This is the part that I'm mostly interested in. Okay, current ratio 2.70. For the retail sector, a healthy current ratio typically ranges from 1.5 to 2.5. A ratio above 1 is generally considered good, indicating the ability to cover short-term obligations. So they're doing above and beyond with this one. Comparison and advice. 2.5 is strong, above common benchmark. This indicates excellent short-term liquidity, meaning the business has ample current assets to cover its current liabilities. This strength is particularly beneficial for a seasonal business like agricultural chemicals retail, providing a solid buffer for fluctuating cash flows and inventory cycles. So that's really good news for the logistics department. Maintaining this strong liquidity, but also ensure that current assets like inventory and accounts receivable are managed efficiently to prevent idle capital. Debt to equity ratio is 1.12. For retail businesses, a ratio of 0.5 and 2 is often considered acceptable, though a lower ratio generally indicates lower financial risk. Working capital, positive working capital is a good indicator of operational liquidity. The absolute value is most meaningful in the context of business scale and operational needs. So if the logistics department is asking themselves, are we able to increase inventory by $150,000 of purchases in preparation for next year's growing season? Looking at their financials, I would say that yes, it is feasible for them to take advantage of this early order program and purchase in large quantity. If they want to be more conservative, they could purchase less inventory. Another thing they can do is look at last year's financials, even 2 years financials, 2 years ago financials, to see how their financials looked from throughout the year, but specifically January to April, where they're going to be paying these invoices out. Another question they can ask themselves is, can we purchase new equipment? Should we purchase or finance new equipment? From a lender's perspective, they're going to be more willing to finance the equipment, give better terms, lower interest rates. But if the network is declining, then maybe they can choose to lease the equipment or just delay the purchase. But in this case, for this company, it makes a lot of sense that they're able to purchase new merchandise or purchase new equipment, should I say. From a sales and marketing department point of view, usually in the agricultural business, when you are wanting to increase credit limits with the manufacturer to buy more quantities, to buy larger quantities, they will ask for the financial statements of the company. For this company, looking at it, I think the manufacturer will be very happy to give better terms, 60 days, 45, 60 days, 90 days, and maybe even give discounts. Other thing is the company can start thinking about expanding by having a new location or creating a new product line. Again, looking at the financials because they have a very positive net worth, their working capital looks good, and the ratio between the debt and their liabilities look good. I think they are in the position to expand locations and to even try a new product line. And in the case that in the finance department's perspective, they want to ask for a loan, I think the lenders would see their financials as a positive and will be willing to offer better terms. Another perspective is the HR department. Maybe they're asking themselves, can we contract more workers, offer better health insurance plans, offer 401k plans? Looking at these financials, I think it makes a lot of sense that they will be able to do all of those. Now let's look at a different financials and how these decisions are going to change according to all of these numbers. So let's upload another balance sheet with different numbers. This is the importance of knowing the financials, but not only just knowing the numbers, understanding them, and also knowing the ratios and how do they compare to other companies within your industry. That's what's going to really help the company determine in what financial position are they in, because they may look at the numbers and say, oh, this looks good, at least we're not in negative, but maybe compared to another company is not great. And also they're able to see where can we improve. So we're going to look at these financials and see, we're going to see the difference. Okay. Yes, so this looks very different. This looks very different to the other company. We can already see the net worth is negative. Debt to equity is negative. We're going to see what that means. I'm gonna reload. Let me reload this is the thing with AI. AI is great, is amazing. However, it's not always predictable. And this is retail. Okay, so right away we can see the net worth is negative. They have a lot of liabilities compared to assets. And here we can see the financial ratios versus the benchmark. Current ratio is 0.82. Benchmark is 1.5 to 2.5, indicating a critical liquidity shortage. Yes. Debt to equity, negative 4.80, due to negative equity, signaling extreme financial distress and high insolvency risk. When benchmark is 0.5 to 1.5. So yes, this company is in bad shape. The app gives you some of the reasons why. So immediate liquidity crisis management. Your cash position is low, working capital is negative. Focus on strict cash flow forecasting, expediting accounts receivable, and negotiating payment terms with vendors. This is what we were talking about for the sales and marketing department, or should I say for the sales department, to negotiate with the vendors, the terms, and even discounts. However, with this, like I said, sometimes they ask if we want a higher credit limit, they ask for your financials. This does not look good if you want to negotiate terms with the vendors, unless your vendors are not asking for the financials. And then inventory management with 150,000 in inventory, analyze turnover rates, liquidate slow moving stock to free up cash, and review supply chain practices. So if we look at the inventory, we have 158,000. Accounts payable 148,000. So most probably most of this of the most of that inventory is not paid for. Accounts receivable is very low, cash very low as well. So yes, they will need to concentrate on first seeing why is that inventory so high. Maybe they have products that are not selling because they're not in season. For example, here in Florida, we have the rainy season. During those months, people buy, or just say growers and farms, they buy a lot of herbicide to kill the weeds. So they would have to determine what is not selling and why, up their sales, collect the money faster. But the thing is, they have a lot of liabilities, and they owe 148,000 to the vendors. So forecast given policy implement rigorous checks for new customers and enforce strict collection procedures. So yeah, so this with this financials, the company is going to have a hard time finances new equipment or asking for a working capital loan. And if they do and they get accepted, they would have a very high interest rate because their financials are not looking good. In terms of expanding or having a new product line, right now I don't think that's the priority for the company. The priority is increasing sales to get that inventory out, to be able to pay their vendors, collect the money faster. That's their priority right now. Their priority is not maybe getting a loan, but with very high interest rate, but it's definitely not buying more inventory. So this is the opposite of the first scenario that we saw. Let's see another scenario. Let's see a midpoint, not as good as the first one, but not as bad as this one. Let's see what that would look like, and what can we learn from that. So we're gonna upload the CSV balance sheet. I'm gonna upload it again, so the system could get all the liabilities. And I'm gonna say this agricultural chemicals retail. I mean, there you get to see the difference and how, depending on those differences, that's where each department has to put all the cards on the table and see what is what is not working and what is the best decision at the moment. So, and from that, with that scenario, the bad scenario, if from the HR department perspective of offering, 401k plans, offering better health insurance plans, or hiring more workers, they're in a bad position to improve in that area. So that's why I like this app. It gives you the benchmark compared, because you can look at the numbers, you'll be like, oh well, I have 50,000 in cash, that's not that bad. But when you look at everything together, the comparison of the assets and liabilities and what does all that mean, you're able to see that you're actually not in great position. Okay, so for this scenario, we see the net worth is not as bad as the other one. It's not as great as the first scenario, but this is a healthy looking company, very normal numbers. Let's look at the benchmarks, which is most important. Current ratio 1.24, below the healthy 1.5 to 2.0 benchmark for retail. This suggests constrained short-term liquidity. Focus on improving this by accelerating receivables or optimizing inventory turnover. Debt to equity ratio 5.15, very high, indicating heavy reliance on debt financing. Okay, they have a lot of liabilities and significant financial risk. Prioritize reducing debt relative to equity to enhance financial stability. Working capital, positive, which is good, but the margin is thin. Continue to manage current assets and liabilities to grow this balance for operational flexibility. Okay, so they have basically saying they have a lot of debt compared to assets, which it makes sense. That's why the net worth is not as high as the first one. But it's still strong enough that maybe they would be, from a lender's perspective, they would be, their approval rate would be higher than the other company to finance in new equipment or get a loan. Now, should they increase the inventory and buy large quantities of inventory? I would say no. If they buy inventory, it should be low. Let's see, inventory right now they have 130,000. Accounts payable 112. Okay, it's not super great, but it's reasonable. Would they buy inventory? If they decide to buy inventory, it should be very low. They shouldn't spend too much money on it, and they should just concentrate on taking that inventory out, selling it, collecting the money within 30 days, and they should be good. When it comes to the HR department perspective of contracting new workers, I think it's feasible for them to do. But when it comes to offering 401k plans or offer better health insurance plans, I think that is in question whether they're able to or not. I mean, right now it's not. It doesn't make sense for them to do that. Their priority is getting more sales, getting new clients, getting that inventory out, and paying off the liabilities. Because their assets are not that bad, it's just they have a lot of liability. They have a lot of loans, especially this long-term loan for the warehouse. Let's see what advice the app gives this person. Optimize stock levels to meet seasonal demand and minimize carrying cost. with 58,000 outstanding, implement effective credit and collection policies to improve cash flow. That's one of the things I mentioned. Cash position is low relative to current liabilities. Explore strategies to improve liquidity. Yes. Accounts payable, your largest current liability. Negotiate favorable payment terms with suppliers. So this is the time to maybe start speaking with the vendors to see if they can extend the terms. All of those conversations should start happening. So yeah, this is the app, and I personally find it very helpful. If I had a small business, I would use this because it's not just a net worth calculator app. It gives you information about your industry, gives you a little bit of advice about your industry, and also compares your ratios with the industry benchmark, which is very, I don't know if any calculator app there, I don't know if there's any calculator app out there that does
Now
that.
that you've seen each part of our app and learned how it was developed, I'd like to wrap up our presentation by revisiting the bigger picture and highlighting why our project matters. Throughout this project, our goal was not only to create a functional app, but to build something that delivers real value to users. Every feature we included, from the asset and liability inputs, the financial recommendations, was designed with purpose. We wanted to create a tool that everyday business owners could use to gain financial clarity without needing advanced accounting knowledge. One of the biggest takeaways from this experience was understanding how important financial transparency is for business. Many small business owners struggle to interpret financial statements or track the exact health of their business. Our app addresses that challenge by simplifying the process into a clean dashboard that's easy to navigate. It takes complex financial concepts and breaks them down into something understandable and actionable. And in these days, people want things that are very simple and very clear to the point. When it starts to become a little too complicated, people get overwhelmed. They tend to not know where to go from there, and having just a foundation of how they can interpret their financial data will make the biggest world of a difference. Another important takeaway from this project was the importance of team collaboration. Each member of our group contributed something unique, whether it was design, coding, user interface planning, or content creation. Through our work together, we learned how to communicate effectively, divide responsibilities, and support each other throughout the development process. This experience taught us skills that go far beyond the Opal platform. It taught us how to manage a real-world project from start to finish. Another key part of our process was use of AI tools, which played a significant role in improving our workflow and the quality of our final product. AI assisted us in several ways. It helped us brainstorm ideas for the app and refine our concept by suggesting features that would be valuable to business owners. It also supported us during the development stage by helping us write clearer explanations, help structure our presentation, and organize our thoughts logically. We needed help understanding how to phrase certain sections or how to simplify financial terminology. AI gave us guidance that made our content more user-friendly. It also helped us explore different business scenarios, create example questions for our app to solve, and make sure our explanations were accurate and easy to follow. Overall, AI acted like a creative partner and an editor, helping us stay organized and saving us time so we could focus on design, teamwork, and improving the user experience. AI, these days, people use it kind of like to weaponize things, and I feel like AI can be such an important tool to use in society. Like, there's questions that we can ask in 1 second and we get the answer immediately. And we've obviously had Google for a long time, but with AI nowadays, where it's like it tells you information at your fingertips and it takes from every single source on the internet, and where you don't even have to look. So I feel like when building an app how we did, it gave us a clear understanding of how to do it, what to expect, how to better our interface, and how to make things more user-friendly for people. And I feel like that's such an advantage that our generation has, that many people back then, like 30-40 years ago, they didn't have that. So we need to be very grateful for what we have today. And also, we also gained an insight into how digital tools can empower users. By using Opal, we learned how to structure data, build interfaces, create automated calculations, and generate insights. These features allowed us to transform the app from a simple calculator into a personalized financial assistant. Our project demonstrates how technology can make financial literacy more accessible and help people make more informed decisions about their business. In conclusion, this project allowed us to combine creativity, technical skills, and problem solving to create a tool that has real purpose. Net Worth Calculator Pro helps us users understand their business finances, make informed decisions, and gain confidence in managing their operations. It reflects the hard work and dedication of our entire group, and we're proud of what we accomplished together. Thank you for taking the time to listen to our presentation. We hope you enjoyed it, and we hope you gained meaningful insight into how our app works and the value it can provide to business owners. We appreciate your attention and interest, and we're grateful for the opportunity to share the results of our project with you today. Thank you so much.